Come on. Work. Please work. Please work. Gosh. I know someone's watching, at least, but this stupid thing isn't working. Let me reset. Oh, when I want to use YouTube, it doesn't work. Of course it doesn't. Please stream now. Finally! All it took was a refresh click on YouTube. Come on, Google. Figure it out. Good morning, everybody. Welcome aboard to the Morning Note. Yes, it is Vape Nation, e.g. when you do this every day, you need something to keep you at least level. Good morning, everybody. Welcome aboard to the Morning Note. It is June 15th, the Super Bowl, New Year's Eve, every holiday you could think of all wrapped into one because it is Fed Day. Probably the most anticipated, unknown Fed Day we've had maybe in recent memory. Why is this important? We're going to break it down. Talk about the market real quick. Dow is up 215 points. This morning, NASDAQ up 1.22%, S&P up 0.92%, Russell up 0.94%. Russell is rejecting that yellow line, the 50-day. I got out of those calls. I don't know if we're going to get a little higher, but it was expiry for today. So getting out of it was pretty much very prudent. But doesn't mean we can't look for an opportunity out there. Crude oil down 0.73, 118.05. Gasoline futures 1.89%. Gold futures up 1%, 18.33 an ounce. Silver down 2.92%. Euro dollar flat 104.12. 134.68. My goodness, on dollar yen. The yen keeps getting nuked longer term, but getting pulled back a little bit, 78 points. The big one, Bitcoin futures 21,000. Oh, I got the spot price 21,234. Give it a couple of points, 1,100 on Ethereum. If you guys have been watching me now for a couple of weeks, I've been saying, if you do break 30,000, you're going to go to 20. We got pretty close. Let's go ahead and bring up the chart on Bitcoin, and then we'll talk about the Fed. 22,235. Let's go ahead and expand this. We'll max this out now to, let's do 5 years. Again, same deal. We're going to go ahead and annotate. Let's see here. Let's do a trend line. We'll do a horizontal line. There's other ways you could do this, but again, this is pretty much the easiest. 19,005, 20,000. That's your 2017 peak. That's what I expected us to check back. If we do get there and hold there, that's a very, very good sign. Again, we know Bitcoin is pretty much the leading indicator for risk. You know, the highest risk asset we could say out there, crypto. Now, in terms of crypto, no, I don't think it's the highest risk one. You have some altcoins out there that are pretty wild. But Bitcoin being a good barometer of risk, again, we got to the low of, here we go. What's the low here? Let me go ahead and bring this up. In the year to date, we'll go to the low. The low so far is $20,081. $81 away from that 20,000 level. The question is, do we hold here? That's really the big question. And that's where we pivot to the Fed. You can see down 3% on Bitcoin. Okay, let's pivot to the Fed. Real quick, before we get there, some numbers that I got here in terms of retail sales. U.S. commerce retail sales down 0.3%. Consensus was up 0.1%. U.S. May retail sales, excluding autos, up 0.5%. So autos were really the killer in terms of retail sales. That's a good sign if you want deflation, because used car, energy, automobiles, all that was a big part of that CPI. Anything energy like that, car sales, they add up. U.S. made retail sales, excluding autos and excluding gas, up 0.1%. So again, you're getting retail sales outside of used cars or outside of cars right now. So again, they did fall pretty hard. Let's take a look here. U.S. mortgage applications up 6.6%. Previous down 6.5%. MBA Mortgage Bankers Association 30-year mortgage rate June 10th, 5.5%. So if I bring up that chart regarding the mortgage, 30-year mortgage, it's pretty wild. Let me go ahead and get you that 30-year. Still getting used to all the shortcuts on Bloomberg. I haven't really had a chance to get there. 30-year, here you go. So bankrate.com. I'm going to have to save this chart. Intraday price chart. Here's an intraday on the 30-year mortgage. Intradays doesn't work. Let's go to a 5-year period. And you could see almost 6%. Wow, what a difference, man. Look at this. 2020, we had 2.94% on a 30-year. We bottomed out pretty much, bottomed out twice, right around November and September. Obviously, the stock market was higher. That was regarding with low rates. Now nearly 6% on a 30-year. The fact that we're getting at least mortgage applications shows there's still demand for housing. And with that being said, it looks like applicants are expecting higher rates in the future. So expect treasury yields to go higher depending on the Fed. So let's go over exactly what today the game plan is. And I talked about this on Instagram. Let me go ahead and bring up the actual tweet from JPM. Well, it's from Bloomberg, but JPM broke it down. Let's see here. I do have it in front of me. Where is it? Here we go. JP Morgan. 50 basis points. Let me get that for you. This is from JPM. Take a look. 50 basis points. This would be market negative and may represent the worst case scenario. So that's basically what we don't want. We don't want 50 basis points. We need higher. 75 basis points. Stocks rally initially on the print. That I agree with. And that's the scenario I'm going to focus on the most. 100 basis points short term, this is likely negative. I expect that. But that view could fade later as bond yields fall. So what we're really hoping for, and it depends on your view of the market or what you're trying to accomplish. If you're a long-term investor, all this is mute. You really don't care. You're staying invested. You're doing your thing. But if you're a short-term trader trading on volatility, an options trader, futures trader, what have you, in Forex, I think every time I'm with you guys, I get some kind of news bulletin. It's pretty funny. Anyways, with that being said, let's say we'll go with the scenario of 50 basis points. Let's go with that. And let's go ahead and take a look at what levels we're looking for. Let's start with SPY. I know everyone always asks me about SPY. You have a gap to fill right here at 389.72. That gap will be filled. One way or another, it will be filled. That's what we're looking for. 389.72. That's my target. So let's call it 390. If we get the 75 we want, we should break 380.25, and then we'll get this gap fill. After that, we could sink again. That just really depends on volatility in terms of the bond market and the dollar. The dollar's down, yields are down, hence stocks are green. Remember we talked about the inverse correlation. You need the dollar to go down. We need the 10-year yield to go down. 75 basis points might get us there. 100 might get us there. Maybe. 50 is literally the worst case scenario. We're going down. We're going to continue to go further. It shows the Fed is behind the curve. I think 75 is prudent with the announcement that every meeting is live. I think that'll calm down the bond market. I think it will show that we are, or at least the Fed is serious about inflation. That is a goal of theirs to tame that, to get us back to the 2% target that we want, right? And then, with that being said, we don't know what we have moving forward. The dot plot shows even more than that. September, October, November, you got it. So again, 75 is not the end. If everything works out in terms of supply chains, we get peace in Ukraine and we start getting some oil flowing, sure. But keep in mind what I just said. Supply chains, Russia invasion of Ukraine, and also getting oil out of the ground and transporting it. The Fed cannot control that. Inflation is not based just on the Fed. It's more than that. So again, unless you expect Jay Powell to start drilling for oil or becoming the peacekeeper in Russia and Ukraine and curing COVID in China and lockdowns and getting supply chains back on, I wouldn't expect much. Again, a gap fill. That's pretty much what you're looking for. 390. After that, God knows. We could possibly see a nice ricochet rally, maybe to 4,000. That's by the end of the week, possibly. But, I mean, we do have triple witching OPEX on Friday. Tons of money, tons of contracts being expired. So, I do expect a green day. I've been saying that the past couple of days. I thought we would get a green day yesterday, front-running the Fed. I guess they're just going to do it today and short squeeze everybody. That's what I expect. The NASDAQ did end green yesterday. Qs. Qs, we have a gap to fill. Right, actually that gap is filled. So again, we have that split there. So Qs, that's done, but SPY has a gap to fill. And we have more gaps to fill to the upside on Qs anyways. Right here at 348, we have one here at 359. You will get back there eventually. The question is when. But gaps, most of the time, do fill. And I would say about a good 85% chance that we will fill it eventually. Again, I can't give you a time frame because I'm not sure. And then you also have the gap to fill right here at 288. That's our target. So what do we need to do? We need to get above 288, right on NASDAQ. We need to get to really, I have that line there, 295, I believe that was the number. Let me make sure. Was that the gap fill? Nope, the gap fill is at 288. Let me go ahead and set that up again. I thought I did that. Let's go to the hourly. What will get us there? There you go, 288. So I would say if you get above 280, maybe 281 on Qs, possibly buy some time and see if you can get that short squeeze. But again, it is dependent on the Fed. You could possibly get a shot that you get a front run into the Fed where we get this break. Then I'd get the hell out of it ahead of the event. But other than that, that's really all you're looking for. Everything's dependent on the indices right now. Will you have a couple of names here and there that may outperform? Of course. Could we go absolutely red to the dungeon and start testing some really, really horrific levels? Let's go and take a look here at charts. Let's see. Yes. Again, we'll go to the daily, start seeing some possible levels. We'll go to the weekly to give us a little more of expansion. Then we'll get some questions. 36.64 is your 168 fib. I think that's the low of the week if worst case scenario things happen. A place where I'm probably going to start putting some good cash to work, 3,500. If we start tapping there, that's where I'm like, you know what? I'm closing my eyes. I'm buying it. Screw it. I mean, I'm going for it because that's what we're talking about, getting back to 2020 levels, possibly even 2019 highs, which is 33.88. And keep in mind, we spent all that money, all that equity gain, back to where we were, back to square one, reversion of the mean. I don't think we get there. 36.64 seems about right for me. 3,500, I'm closing my eyes and buying. And then God help us all, right? But I would think that's pretty fair in terms of PE. We've talked about how profits could change, EPS could change. So again, 36.64 is a very, very key level. Trust me, we're not the only ones that are seeing this level. A lot of algos, a lot of fund managers are watching that level. Again, that's 120 handles away. Let's answer some questions. Tesla charting and Ford puts 3 million recall plus Mach-E. Yeah, that Mach-E. I've heard a lot of people love that car. I do see it around my area. Let's look at Tesla. Tesla, you do have the low right around, let's call it 600 right here. Inverse head and shoulders, or inverse head and shoulders. So again, you could get a nice little pop on Tesla. And we know Tesla does run pretty close to the NASDAQ. So expect volatility, of course. It was a nice bounce yesterday. A break of 697, that's where I would get interested in possibly some Tesla calls to the upside. Again, it's pricey, but we're going to get another split anyways. So let's call it 698.50. Will give us a little bit of room right above the 100-day. In terms of Ford, let's see here. Ford announced that news yesterday, but they were up for the day, about 4%. So that really didn't make a difference, but there is a gap to fill on Ford on the hourly, 12.75. That would be my target if you're trying to play calls on it, break 12.50. Maybe you could squeeze out a quarter of the stock price, meaning 25 cents of the stock price, and then just get out. That's the only thing I see there in terms of Ford. Would I want to own Ford? I believe Ford does pay a nice yield. Let me see here. Doesn't do much in terms of capital appreciation. Their PE ratio is ridiculously cheap, 4.29 and a 3.28 yield. I don't think that's a bad play. The problem with Ford is that they're discretionary, meaning that, hey, if things really get bad in recessions, car companies are the first to get nuked. Car companies, furniture companies, real estate takes hit. Again, anything that's not food, gas, and groceries. Or groceries, food, and possibly some kind of entertainment. There's some people out there with kids, they're never going to turn off that damn Disney Plus or turn off the Netflix. If not, they're going to go crazy. In my home, I basically have like 4 streaming services. For me to cancel that, I mean, it would take a lot, let's just say. It wouldn't take a recession to cancel that. What time is the FOMC? 2 p.m. is the actual decision. 2:30 is going to be Jay Powell speaking. I will be watching it and live blogging on Twitter. Feel free to follow me on Twitter at G.A.R Capital. What automotive stock would you prefer besides Tesla? Thoughts? NIO. That's the one I own. Let me see if I have that here. This chart. They just released their new SUV, I believe. I just saw it. Let me see if I can tweet it out for you. If you guys want to take a look. Yep. Their new SUV called the NIO ES7. And they are slightly up this morning. And I do own shares, granted from a while back. But that's the only automotive EV company I own. In terms of just EV and automobile in general, let's say GM. Well, I don't know if GM pays a dividend. See, I don't think they do. So I wouldn't want to own it. Yeah, they don't pay a dividend. Ford does. I'd rather have Ford if I had to pick one more car company. The only other one I would say is probably Volkswagen. Volkswagen, the Porsches are very nice. Unless they go IPO. Either way. But Volkswagen is pretty good. Amazon break of 104 to run to 109. Let's see it. 103.36. They are up. You kind of see a nice double bottom possibly. If you break 100, then this is invalidated. 109.59 is your gap fill. Very well done. Broke VWAP. I like that name. Broke VWAP. Good eye. That'd be the level I'm looking for. The one level that you're trying to break here. 105.40. And then remember, the prices for options on Amazon is cheaper because the stock was split. So wait for 105.40 for that break. Let's see here. Redbox. Yeah, I heard that was a big one in terms of the, what do you call this? The community of Reddit traders. It is down pre-market. I would be wary of trading this or owning it. Again, if you're owning it, just keep in mind you do have you have a gap right there, right at $8.58. If you really feel the need that you want to get in, I'd wait for that gap to fill, personally. GME. Again, when it comes to these hyper growth names, it's going to be tough. Pretty much sideways action. Not much going on in GME. If you're holding it, you're just holding it here. Any downside gaps to fill? Nope. So in terms of risk in GME, we know there's tons. The only issue is that these growth names, guys, when interest rates are higher, they're not going to be as attractive to investors. So again, if we buy something, we're expecting it to gain in value so we can sell it later. We just don't want to own it just to own it. Unless if that's the case, you just want the dividend. But GME doesn't pay a dividend. So no, I don't like GME here. Can never take Coco Melon away from the kids. They'll find a way. I don't know what Coco Melon is. My stepson watches Phineas and Ferb. I don't know if anyone else watches that. I think it's kind of dumb. I personally watch Obi-Wan. The new episode is tonight. Guess what I'm watching? Levels to watch, levels to buy QQQ. If you're talking about the actual stock itself. 260, 215, 168, 18 fib. We talked about that on the ES. That's a really good target, 262. I don't know if we get there, but we could. Definitely want to start adding there at 262. That's, I mean, if we get below then God help us all, because then it starts really getting scary where you're talking about you can get back to, I don't know, 234, 2019 peak. Scary stuff. And Lucid. I don't own Lucid. Lucid is making cars. And the only issue is that supply chains. We know the drill. Tesla's probably the one that's going to be the best fit in terms of EV. We know that's the #1 name. There's a gap to fill at 18. If you're trying to play Lucid, you could try to see if you could break 17 and squeeze out $1. But I think the indices are probably going to best bet. The mega cap tech, anything with higher volume is going to definitely get at least some working for you while you're trading. But again, you need 3,800 on S&P, guys. 3,800, you fill the gap to 3,897. After that, we'll see. I mean, this could happen during the FOMC or before. So I'll be watching very, very closely as we go. A lot of moving parts, guys. I highly recommend that if you have Twitter, follow us on there, at G.A.R Capital. Turn on notifications, all the news, all the information you need. Instagram, it just isn't the best place for news. We try to put as much as we can. Their algorithm's kind of weird. Go to notifications on Twitter. You're going to get it in real time. Best way to do it. We'll keep you up to date with Bloomberg headlines, all the information I get as I go along. And of course, Discord members, follow me on the blog. All information will be there as well. Have a great rest of your day. We'll catch you guys after market recap. We'll have a lot to go over on package Powell's statements and the rate hike and see where we go from there. Have a great rest of your day. It's time to go to work. Enjoy Red Bull. Cheers.